over the past few years, AI, blockchain, open banking, cloud, they've all emerged as potential cornerstones of financial services, and more importantly, they are the areas of buzz that everybody's talking about. I think we recognize that in some of the presentation material. What are you seeing here in terms of the appliance of these new technologies? If you just give us some thoughts on that.
Sure, I think we sort of look at our client base broadly, and you see sort of a mix of what I would call adapters and adopters. You know, personally, I think the most interesting aspect of that evolution is how companies are re-envisioning where financial services integrates into their own models and processes. So typically, we would sell to the Treasury Department of a company, and finance would manage the payment function for a Fortune 500 company. You think of an insurance company today, where an active dialogue is much more around where do you integrate the origination of the payment itself in the workflow of claims processing. You don't need your claim system to generate a file, to go to Treasury, to go through 7 more steps, to send a file to the bank, to send a payment out. What you want is once that claim is approved, the claim system's leveraging that API to issue the bank order for the electronic payment to the beneficiary. So it changes the whole ecosystem around financial services and how we sell to customers, how we collaborate with customers, and probably most importantly, how customers can really, really envision a much more efficient, much faster way of interacting around financial services.
What are you seeing? Are you seeing this take up?
We're seeing innovation take place really from the bottom up, particularly at the larger the institution, the more we see innovation being distributed across the businesses and products. So from an advisory standpoint, we have found it's far more beneficial to advise at the product level, at the line of business level, as opposed to top down at the enterprise level. Now, it is interesting because we are starting to see a bit of an inflection where a lot of the larger financial services institutions, both banking and insurance, are trying to do innovation, I guess you could say, more at scale and bringing together enterprise, taking out innovation out of the businesses and creating enterprise levels. But I would say right now it's varying degrees of success around that. So there is a lot of innovation taking place within the industry, but it's still very much bottom-up driven.
How do you balance, the innovation requirement from the business with you just got to do what needs to be done?
Correct. So let me put it this way. So I think 20 years back, for any banking or financial institution, there were 2 stakeholders, right? It was our customers, right? And it was Deutsche as a whole, as a company, and our shareholders. But over the last 20 years, we have slowly moved into an era where we have a third very important stakeholder, which is our regulators. So whatever we do, it's not just for our customers and for our stakeholders. We have to make sure whatever we do, whether it's innovation, new technology, it has to be seen and made sure it's received well with the regulators as well. 5 years back, 10 years back, we were talking of AML, transaction monitoring, and we were saying, okay, what tool to use? But now we have reached a stage where more or less the tools are mature, but the threats have become so dynamic, so they are changing so quickly, the whole arena is changing so quickly, we really cannot stick around with the traditional monitoring methods. So now the real fire in our side is looking at what is the latest technology that we can leverage to really have a quick time to market, where we can look at the new things like in matter of hours and days and not necessarily months. It's a balancing act that we need to do, which technology to use, which direction to go, that we are aligned with the future, aligned with the emerging threats.
How are we seeing this enablement of the fintech? You talked about the hackathon. I mean, do you see Oracle's challenges, embracing a new route to market, or indeed how you can work with the fintech to provide those services and maybe partner in a different way than we ever have done before?
Now we have the blockchain, and the blockchain is going to allow us to disseminate value more seamlessly, just like the internet disseminates information. This is all an additive effect, and the point that Ron's making is that more and more of these capabilities are coming. They're leveraging everything that was done in the past, but they're bringing new angles and new capabilities. And this is where banks have a big challenge, or financial institutions in general have a big challenge, because they have to watch for these trends, and they have to keep their existing customers happy, they have to keep their existing investors happy. And this is where one really has to think about, what one has to think about is, are financial institutions, or are they really tech companies again? right? And so I see, when I start to talk to particularly bigger banks, they're starting to fashion themselves again as tech companies, precisely so that they can behave like the WeChats of the world. And while they're doing that, the thing that they have to focus on is, what is it that they can do really well, and what can they bring in from the outside? It's striking that balance. Can we bring fintechs and technology companies together into the financial institution and create a sum that is greater than the individual parts?
Perfect. Sorry, Jim, you want to come in on that?
Yeah, to your point, we've seen those banks and financial services institutions that have started to think of themselves as tech companies. They have moved farther and faster on the innovation scale than institutions that still consider themselves traditional banks or traditional insurance companies. So the mindset is definitely different there in terms of adoption. And one other thought too, because we've talked a lot about the burning platform being the competitive dynamics and the customer, but I would also argue that internal efficiency, cost, and quality are also just as important in driving innovation activity at the institution, but just as important, the ability to improve quality, the ability to improve cost and efficiency in delivering services and products to customers is just as important.
And Judd, from your perspective, you know, as Ron, you put in your presentation around the blockchain being the enabler, how's the balance in your role in looking at the apps versus the enabling technology? Are you seeing that shift? Or
I see blockchain absolutely as an enabling technology. I think one of the things that, especially as a very large bank, we look at it is the transitional nature of how you apply that technology. And Sunny mentioned the proof of concept work we've done with Oracle, and what that was really designed to sort of acknowledge is that we have a lot of legacy challenges, right? And trying to progress everything at the same time in an agile form is absolutely unreasonable, if not totally unrealistic. So how do you apply those technologies in a way that it allows you to be more agile, meet more customer demand, but do it in a transitional way? So as we applied blockchain in that use case, we basically used it to interconnect our distributed account platforms, recognizing that customers really got a lot of value out of real-time cross-border interactions, and we're able to manufacture that experience for them using a new technology, which to me really harnesses the transitional nature of how you have to think about, whether it be blockchain or same way we use fintechs, right? It's to come in and help sort of build that fabric of change to allow us to progress to the customer expectation as quickly as possible.
when we look at financial singularity and projections, saying, you know, it's going to be the world of Skynet and the Terminator Day, and how do we dehumanize and rehumanize but deploy these new kind of capabilities?
But I think the point is to try to understand how to make this process with less friction and less people and more automation. We have to get rid of some of these old ways, like paper, right? So I'm an investor advisor to DocuSign. It's going public in a couple of weeks. These are the kind of things, there will be no paper. There'll be no room, no trees, no place to store it and shred it. There will be no physical devices. It's getting our customer experience away from paper, away from the desktop, soon to the wearable, so that we can interface with this next generation in a very different way. They are the same as us, but they want things in a very, very different way.
When we look at some of the AI and robotic applications and you know, having one of the bigger branch networks in the country, one of the challenges is how do you provide that level of automation and efficiency, but in a way that the consumer across the generational portfolio is comfortable interacting. So in our testing, for example, having a RoboCop type of robot in a branch is relatively off-putting to most consumers. Having a holographic image that interacts you with the likeness of a person is much more receptive. What we forget, especially as very large companies who are serving a population that is so diverse and different, that you've got to figure out how you sort of tune your strategies to try and make everybody as happy as possible.
So banks, the core business is to make money for their customers, for their shareholders, right? Make it secure. On the other hand, we want to do new technology, right? So fintech companies are rightly placed to come in the middle and do that balancing act for us. So we as a bank might have the financial muscle to spend the money, but we don't really have that kind of an appetite to spend on technological innovation. So we do look up to companies like Oracle or other fintech companies where you're saying, you know what, you have the financial background, you understand our problems, you have the technological muscle to do the research and tell us, you know what, this is the best suited solution for you.
The only way you can do this and do it at scale and do it in a way that's going to be impactful given the pace of change with technology is by building out that whole network of partnerships. And I think that's really where the marketplace is going, is developing mature sets of ecosystems of partnerships out there depending upon where your focus is.
Trust builds speed, right? So without trust, we can't really, we can go crazy fast, but we're not really going to deliver. So what are you seeing with our customers and prospects in terms of driving this new model forward? Fintechs on, dare I say, one side, financial institutions on the other side, and how is Oracle helping to bridge some of those gaps?
Some of the more progressive regulators are starting to put in regulations that force this cooperation as well. I mean, if you look at PSD2, it's basically asking banks to say, look, open up some of your core services so customers can eventually benefit from this rapidly growing explosion of innovative technologies that fintechs are bringing to the table. And I think what we are trying to do is help facilitate that from a technological perspective. We're saying, let's build the capabilities that allow banks to expose their core capabilities to a broad ecosystem of partners. The eventual beneficiary are all the players in the party. It's the fintechs, because they get access to services that will take them a long time to develop. The trust factor, the factor that allows regulatory compliance, the level of data. So that cooperation can make for a very potent combination. So when you look at things like bringing that ecosystem together with fintechs benefiting, the banks benefiting because they can bring that innovation in, and at the end of the day, the customers benefiting. It's a virtuous relationship, and technology will continue to play a central role because someone has to make that interaction feasible.
From a fintech perspective, looking forward 6 months, 12 months, what's your wish there, Ron?
What we need to do is wash out the pretenders and get the real fintechs to really get in with the incumbents to make this thing as good and big and fast as it really can be.
Thanks, Ron. And
I would agree. I think to that point, it's recognizing that the agility has to come from both sides, right? It's not just the big incumbents getting better and faster, but those fintechs selling in the value propositions to the incumbents, really taking that step back and thinking, through how do I build that as part of my value proposition, right? How do I bring that part of the partnership to bear?
But the biggest gap I see right now, like almost unanimously, is that even though we want to do it, we are not finding the resources to do it. So there's a big hole, a big gap over there where we can really train people.
My wish list item would be to have the information security teams at the table on day one innovating with the product and lines of businesses teams.
I think hype is fine, but focus on use cases, focus on real business outcomes and have those drive the adoption of technology. That's definitely a challenging concept, because at the end of the day, you don't come out with things that really get proven out. But if you zero in, like Wells Fargo has done, or Deutsche has done with blockchain as an example of machine learning, and start to zero in on real outcomes, all of a sudden, some of these things start to become reality.